tell me how the business of oil services has changed.
Well, thanks, Alex. It's great to be here. And oil services is a fascinating business because the technology moves so quickly that we're always relevant. And what we've done at Halliburton in particular with technology has kept really the cost of oil and gas competitive with everything else. Reality is it's a very efficient industry today and a very efficient form of energy.
And no peak oil. We're not talking about that anymore, in part because of all the technology. The difficulty is if you take a look at, say, oil price versus your stock, you hit a 52-week low. The last time you were at that price, oil was at 22. Oil's at 67. How do you explain that underperformance?
Look, I think that's, outlook on the business, but the fact is that outlook gets better and better all of the time. And look, we went through a really tough 4 years of downturn, a lot of underinvestment in oil and gas that whole time. Now it's coming home to roost. And the reality is, our outlook for oil and gas and supply and demand is very constructive. And I think we'll see that play out over the next several years. Really feel like we're at the beginning of a very strong cycle for oil and gas, particularly services.
The other side to that is you're not getting rewarded for any of that yet because there's still so much competition in the space. Yes, you're the biggest, but there's still so many players that's going to be hard to find pricing power when you have to fight for market share. What do you say to that?
Look, I say that's why we focus on our value proposition at Halliburton, and we are dead focused on how we collaborate and engineer solutions that maximize asset value for our customers. I know it's a mouthful, but it is what we do, and we invest in technology, and so we deliver that a barrel of oil at the lowest cost per BOE, and that wins over the long term. So I'm comfortable with where Halliburton is, and there's a lot of demand for our services out there.
But you have to look at the stock and not be happy about that.
Well, we always want to do better, and I expect that as we look out at the future, we will have the kind of market that supports that investment.
So when we talk about that kind of market, does that mean you have to see pricing power come back? Does it mean more market share? Does it mean even higher oil prices? Does it mean more M&A maybe in the E&P space? What's going to be the magic sauce? Yeah,
well, it's demand. And we look out at 2019 and see a couple of really good things shaping up. First, in North America, where Halliburton has the largest market share. If we look at 2019, we see real catalysts that sort of lay out a path for more activity and demand, which will create tightening, and we expect there to be pricing tightness, pricing power as we move through those catalysts. Same time, internationally is another great story unfolding, which has really been down for the last 4 years. And as we start to see production in countries decline, commodity prices are solid, we expect to see a lot more investment internationally. And so those two together start to create real momentum, and we see that momentum building 19 and beyond.
And we're going to talk about international in a moment, but staying with domestic for a second. I hear you, but then I hear from EOG that they wind up seeing well costs down 3% year to date. Next year, they see 65% of well costs already hedged, like they're already in the market. How does that leave you room for pricing power?
Well, it's a busy market, and that pricing power comes in the form of tightness in the market, and it's a really big market today. And at the same time, our technology allows us to make the best returns. And so when we look at pricing is certainly not our only lever as a service company. And in fact, when I think about Halliburton, our primary financial objective, have leading returns in the industry, which we demonstrate today. We've had them today, we've had them through the downturn, and really over any period of time that we measure. So when we think about our business, we think about how much capital does it take, what's the most capital efficient solution to things, and so pricing clearly is the bluntest of all instruments, but making returns is really our business.
So in talking to a lot of analysts about it, the overwhelming feel is that there's a skepticism that oil services really understand the companies, the E&P companies. The E&P companies have moved on to different types of drilling, different types of networks, and you guys are kind of stuck in the past. What do you say about that? Do you feel like you need to change your business model in order to capture the upside?
Look, we are part of that change. I mean, that technology that's invested, I'm really excited about our drilling technology. I mean, we can do things today that weren't even dreamed about 10 years ago in terms of the type of information we can collect, what we're doing around digital to solve problems, both for our customers and for us. So I think all of those things, from a business model standpoint, we're more relevant today than we've ever been.
So I know that pricing power isn't the only lever that you have, but what's optimal? Is it 10 to 15% pricing power? What's going to be the thing you say, guys, look, we did it, reward us?
Look, our guys are in the market looking for that every day. I won't pick a number, but it's, certainly I expect it will move up. Again, the wear and tear on equipment that's happening today, there's actually attrition in the market all the time with a lot of the equipment that we use. And I think that's underappreciated, particularly when we go into periods of time like the fourth quarter of 2018, where a series of things conspire to create really a lack of customer urgency. But the minute that urgency gets back sort of in full swing, there's a lot of tightness for what we do. 10, 15% doesn't seem, certainly it'd be a great place to be.
So the idiosyncratic factors, I'm guessing, in part is the Permian bottleneck, right? But let me just pick that apart for a second. When do you see the Permian actually clearing and things getting all back to normal?
Look, I think that's something that happens middle of next year, but it's hard to, the moment in time is almost impossible to call. The couple of those catalysts that we see going into 2019, first and foremost, are customer budgets reload. Been very disciplined around capital expenditures, certainly all of 2018. But when just budgets reloading creates activity. And the great thing about the Permian Basin is that is a highly driven, creative group of customers out there, operators, and so they will work every angle to bring pipeline capacity on, or at least create more capacity. And so it will be a series of events throughout 2019 that occur. But it's clear it'd be easy to see as we finish the year things being perfectly normal.
My last question has to do in a broader sense. There's an ongoing investigation between the former Interior Secretary Ryan Zinke and the Halliburton Chairman Dave Lester, who you took over for a year and a half ago. What do you do when Mr. Lester is still on the board and you're on the board? Is there a responsibility the board has in this investigation?
Look, I mean, that's unrelated to Halliburton. What we're focused on every day is delivering the absolute best oil field services in the marketplace, and feel like that's what we're doing. In fact, I think our return record stands for that.
And you think the board doesn't need to address it at this point?
Look, I think that again, we stay focused on our business all of the time, and are really happy with the direction the company's going today.